The world of finance has always been filled with whispers of secret deals, coded conversations, and markets that sometimes seem to move as if by magic. But behind the curtain, there are stories that never make the headlines. Stories of digital footprints, insider secrets, and shocking revelations that expose how greed, technology, and human error collide. Today, we dive deep into one of the most dangerous corners of financial crime: insider trading. But not the old-fashioned kind whispered in smoky boardrooms. No, this is the digital age. Every keystroke, every email, every encrypted chat leaves a footprint. And when investigators follow those footprints, they uncover a web of secrets far darker than anyone imagined. It started with unusual patterns in the stock market. Shares of a mid-sized pharmaceutical company suddenly spiked days before a groundbreaking drug announcement. At first glance, it looked like speculation, but for regulators watching closely, it raised a red flag. Behind closed doors, encrypted messages buzzed between insiders, executives, brokers, and even a few outside accomplices. They believed their tracks were covered. But the truth is, nothing online ever truly disappears. Investigators began piecing together digital fragments: an email accidentally forwarded, a smartphone synced to a cloud account, a secure chat app that wasn't as secure as its users believed. What they found was staggering. Financial analysts feeding data to traders seconds before public announcements, coordinated buys and sells that netted millions within hours. And in every transaction, there was a fingerprint: IP addresses, device IDs, metadata buried beneath the surface. The criminals thought they were invisible. The digital trail proved otherwise. The profits were laundered through shell companies, offshore accounts, and cryptocurrency wallets. Yet even in crypto, footprints remained. A wallet created in one country suddenly linked to an exchange login halfway around the world. Blockchain investigators followed the flow, transaction by transaction, until they connected digital currency to real-world identities. What shocked them most was not just the greed, but the sheer scale. Dozens of traders, multiple companies, and millions of dollars changing hands under the illusion of secrecy. It only takes one mistake to unravel an empire. One insider, desperate for more money, used a personal email account to communicate coded messages about trades. Another forgot to mask his IP address while logging into an overseas exchange. Each slip left breadcrumbs that forensic teams followed relentlessly. Soon, investigators had a full map of the conspiracy, a web of executives, bankers, and traders all tied together by their digital footprints. When the arrests came, they shocked the financial world. Some of the most trusted names in banking and business were led away in handcuffs. Computers were seized, phones confiscated. The defense tried to argue, "There's no evidence." But prosecutors had terabytes of it. Emails, chat logs, transaction records, all stitched together to form a timeline so clear that denial was impossible. The shocking part wasn't just the scheme itself, but how carelessly the insiders left traces of their activity. They believed encryption was unbreakable, VPNs untraceable, and digital money untrackable. They were wrong. What does this mean for the rest of us? It proves that in today's world, every action leaves a trace. No matter how sophisticated the crime, digital forensics has a way of uncovering the truth. And while insider trading continues to evolve with new technologies, the same mistake keeps happening. People underestimate the power of the digital footprint. For investors, it's a reminder that markets aren't always fair. For businesses, it's a warning that even trusted employees can become liabilities. And for regulators, it's proof that technology can be both the criminal's weapon and the investigator's strongest ally. Insider trading isn't just about money. It erodes trust in financial systems. It makes everyday investors feel like pawns in a rigged game. And when those digital footprints finally shine a light on the truth, they remind us of something powerful. Secrets don't stay hidden forever. In the end, the shocking story of insider trading isn't just about the millions stolen. It's about how arrogance met technology and lost. The digital world doesn't forgive. It remembers. Every message, every trade, Every login leaves behind a shadow, and when those shadows are pieced together, the truth comes out, louder, clearer, and more shocking than anyone expects. This is the story of insider trading in the digital age. The footprints were always there. All it took was someone willing to follow them.